Hi everyone, this is Winnie with the St. John's Life Real Estate team of RE/MAX. Welcome to our all-new series of How's the Market. So once a month, I'll be bringing you the latest real estate updates for the St. John's area, from stats to interest rates to factors that could be affecting our real estate market. So, how's the market? So first on to the stats. For the month of December, before the board closes December 23rd for the holidays, the St. John's area has closed 262 properties, which is pretty significant because it's 44% more than the same time last year. The overall prices has gone up about 10% compared to December 2019 to $298,000, and now it takes about 66 days to sell a house, 20 less days than the same time last year. Overall, as a year in 2020, the overall market has sold about 8% more houses, prices has gone up about 3%, and it's taken about 5 less days to sell a house. So it's all going really well. If you ask any realtors if they've expected the market to have gone this way at the beginning of the year, I would say most people would say no. And a lot of my realtor friends have been telling me that this has been the best year that they've ever had, which I actually still have a hard time believing, because if you asked me back before the pandemic if I predicted the market to have gone this way, I would have thought that you're nuts. But it is the way it has been. But I'm sure I'm not the only one that's shocked with the way the market has performed. And you may be thinking, like, what's the biggest driving forces behind this? Why is it that given the pandemic, the real estate market has performed so well this year? I think one of the major factors, and a lot of you might have been aware in the news, that the interest rates has gone to a historic low. Central Bank of Canada now is holding a rate at 2.45, which is the lowest in the last 10 years. On Black Friday, CIBC came up with a 1.49 4-year fixed rate for insured and uninsured mortgages, which is pretty phenomenal for a major bank. And soon after that, HSBC came up with a 0.99 5-year closed variable rate, which made the national headlines, I guess, because to many people, 0.99 is almost like free money. That's one of the factors that I think has been driving a lot of the property sales. Of course, there are a lot more people who are staying home now during the pandemic, realizing how much space they actually want. There is more disposable income in some of the families because there's less travel, there's less purchases. So those are all the driving factors. In terms of some local factors, traditionally, I think our real estate market has been very strongly tied to the oil and gas industry. And not too long ago, Husky has laid off 75 staff given the idling of the White Rose project. And the city of St. John's has laid off 16 people, which is all really, really bad news for the economy. But on the flip side, given the recent acquisition of Verifin, it's been said that they might be looking to hire an extra 600 positions in the next 3 to 5 years. Rumor has it that they're creating an extra 160 positions just in the next year alone. So that could be bringing quite a bit of driving forces into the market for us. So another factor I'd like to bring to your attention is immigration. The Trudeau government has announced that they're looking to bring in 400,000 newcomers as a target for 2021. And for 2020, they actually haven't brought in everyone within their target yet. So you can imagine when the gate reopens, there could be quite an influx of newcomers coming to Canada, creating jobs and driving up housing prices. Of course, not all of the immigrants are coming to Newfoundland, but the significance is that given how the pandemic has changed the way a lot of people are working, being allowed to work from home on a permanent basis, in the marketplace, I'm seeing a lot of Newfoundlanders slowly moving back to Newfoundland because they want to be close to home, they want to own an affordable home, and now they're allowed to work online. Another factor to consider is inventory shortage with new builds. It's been very hard to find a ready-built spec homes waiting for a buyer to purchase this year. Most of the buyers will have to go and look at a sample home that is waiting to be closed, pick a lot or pick their finishes and wait a few months for the builder to finish their build. Materials has been hard to get in, has been expensive to get in. Cost of labor has been high, there are shortages. So those are all causing challenges in terms of getting new homes into the market to fill the gap. In fact, when you're looking at the stats from 2011 to 2020, And in terms of months of inventory, which is an indicator we use to say, well, are we in the buyer's market or are we in the seller's market? Balanced market is about 6 months of inventory, and seller's market is less than that. Buyer's market is way more than that. At the beginning of the year, we started with 21 months of inventory, which is normal-ish for January to have more stock because there are less sales in December, but that's a lot. And then up until, I would say, June, July, August, we have been consistently going at 7 months, 8 months supply. So from a buyer's to seller's market point of view, we are close to a balanced market. I hope this video has been helpful. Let us know what you think in the comments below or send us a private message. And don't forget to like our page or subscribe to our channel so that you'll be getting market updates for the next month. See ya!